All right, let's get started with the top story. Inflation is top of mind for central banks across major economies around the world. Yesterday, you saw the US Fed increase policy rates by 25 basis points and, in fact, guide for several more to come as it contends with decade-high inflation. And the Bank of England has followed suit just a short while back. It is also contending with inflation that's the highest in at least 3 decades. And it has raised policy rates for a third time in a row by 25 basis points, and the policy rate there stands at 0.75%. But in a sense, the Bank of England's commentary and its guidance and its tone was seen as a little bit softer than in the recent past, and that has to do with the uncertainty surrounding the war in Eastern Europe, in Ukraine. Now, the UK, of course, has been contending, like I said, with high inflation, and that seems to be something of a focus point going forward as well. Now, just a short while after that announcement, quite a few of the European indices ended up losing a bit of ground. They came off the day's highs. In fact, the FTSE, as well as the DAX in Germany and the CAC 40, as well as the IBEX, all lost ground. But since that point, the FTSE has regained some of that lost ground. Taking a look at the US markets, which have also opened up at this stage, you have the Dow Jones Industrial Average that's trading with cuts in the initial minutes of trade of as much as 0.4%. The S&P 500 also down by a similar amount. And the Nasdaq is trading with cuts of about 0.6%. Also, the latest data that has come in is on the jobs front, and jobless claims have come in better than expected, with 214,000 claims against an estimate of 220,000 in the most recent reading. Now, investors also seeming to take heart from some of the commentary that came in from the Fed overnight, and also with the hope that the situation with Ukraine is going to be resolved soon. We're joined on the phone line by Atif Latif, who is a partner at Guardian Stockbrokers. Atif, we're speaking just a short while after the Bank of England raises rates, and this comes very close on the heels of the Fed hike. In a sense, I think that was to be expected. What do you think is going to govern what happens in markets in Europe as well as the US now that we have these headline events out of the way?
Thanks for having me on. So, as you said, the Fed have hiked by a quarter as expected. And what's interesting is the commentary that came out from Powell, saying that he is quite confident that the US can handle 6 more rate hikes, even in the face of what's going on with the geopolitical situation between Russia and Ukraine. And coupled with that, the Bank of England were also widely expected to hike a quarter as well, which is what they've done, taking their benchmark to 0.75. But I think what's important to understand is and acknowledge is that the inflation narrative at the moment is that inflation seems to be running away, being escalated by what's going on in the Russia and Ukraine scenario just now. So the bank had to act. But in terms of geopolitical risk at the moment, I think that will be very much dictated, as will market sentiment, by any developments that we are seeing in Russia and Ukraine. And I guess what makes it slightly tricky is that we've had commentary from both sides saying that hopefully we're close to some sort of peace deal on the assumption that Ukraine doesn't look for NATO membership. And again, what makes it slightly tricky past that is that we have the US on one side, and then we have China potentially on the other side. So that's what's also giving the market quite wild volatility swings.
Certainly something to bear in mind and watch. This is, of course, developing even as we speak. Thank you so much, Atif, for taking the time and for giving us that perspective.